Everybody, this is Grant. I wanted to introduce you to some things today. Had a great day trading. It was a very interesting day in the markets. I wanted to introduce you to the notion of market effectiveness. And what does it mean in order for us to trade the real move of the market rather than, the occasional bounces or bumps or jumps. So, glad to have you on board. Now, what I'm doing here today is I'm running a YouTube Live as well as, of course, a Facebook Live at the same time. So if you want to really look at more of the details of what I have on my charts, go to my YouTube channel, Financial Investing Secrets, and there you will find and can see more detail on what the charts are itself. But in Facebook Live, at least be able to point you to this. All right, so what is this all about? So over the last 5 years, I've been studying the markets, trying to understand what's the most effective way to understand price movement and how does price move and what are the rules around it. And I can liken it onto a vehicle, a car, right? The basic notion is that when you're in a car and you're driving up a hill or up a mountainside, as the car starts to ascend up the hill, ultimately you step on the engine, you step on the gas, right? You apply more power to it. And you'll continue to go up the hill. And at some point, often then, the car will slow down while the engine continues to work harder. So there's a disconnect, right? There's a point where the engine's working harder, but the speed is slowing down. So there's two key things to think about with the market. The first is there's a market engine, and the second is there's a market speed, all right? Now, what I have on the left-hand side is the market engine. And on the right-hand side is the speed of the market. On the left-hand side is a chart that I've created using an algorithm that I've been testing and have applied now to my trading efficiently and effectively, and I'd like to tell you about it as well. So I call it the market effectiveness chart. And on the right-hand side, it's nothing more than a 1-minute chart. I'm on the E-minis, so the 1-minute E-mini chart. This is today's market. And what I'm going to do is I'm going to illustrate how the market vehicle shifts gears. And I'm able to track when it's shifting gears and it starts to tell you, hey, the market is preparing to make an adjustment or a change in course or direction. The key thing about this is that there's no lagging. There's no waiting for some other indicator. There's no waiting for moving averages to cross. There's none of that. It is current market engine activities, taking the internals and rolling them up, all right, assimilating those into a single view that says, here's how effective the market engine is at moving price up, or here's how effective the market engine is in moving price down. And when those two get out of connection, when the speed and the engine are not aligned, there's the opportunity. All right, so watch carefully. All right, this is today. All right, so the market effectiveness chart here on the left-hand side, it's a 2-minute chart. It doesn't have to be a 2-minute and a 1-minute, but for my purposes here today, the left-hand chart is 2-minute and the right-hand chart is a 1-minute. I'm going to trade off of the right-hand chart, off of the 1-minute chart. Okay. The only other indicators I have on here are some moving averages, and I use those to understand a few things. That's for another conversation, another time. The things I want to point out here, though, across the bottom, right here, there's two key pieces of information here. On the left-hand side, there's this red line, kind of squiggly line here. You can see it on the left. On the right-hand side, this is the engine indicator. So I wrote the software for this. Okay, I wrote the software that says, hey, I can track what the engine's doing, and then I can map how effective that engine is being over here on this chart. All right. So what does the red have to do with anything? This red line tells me when the market is preparing to shift gears. So think about the market as a car. It's a vehicle. It's got the engine. It's got the speed, and when it's preparing to shift gears, it's letting you know things are out of alignment. This is the time. This is an opportunity for you to prepare for it to go the other direction in real time. No lagging indicators. This is pulling right off market internals. All right, how does this work? Okay, if you look closely, and it might be hard on Facebook Live, so go over to my YouTube Live channel, to my YouTube channel. If you look here on the left-hand side in the red, this is where it's telling me about shifting the gears. And it's pretty simple. You see this blue dashed line? When the red comes down and gets close to or touches or crosses that blue dashed line, get ready. There's a very high probability the market will shift directions. All right? Let me illustrate. Okay, this morning the market opens and it starts to push up. All right? Now let's watch what happens. You can see up here on the top, the market effectiveness chart is saying, yeah, the market's being effective at, the engine is being effective at moving price up. That's what that chart's telling us. All right, so obviously the trade's to the long side coming out of the gates at the opening of the day. All right, tells us right away your trade's to the upside. Okay, we've got that part. What about a shift? Is there going to be a change? Watch this right here. When I put my cursor right there, the mouse right there, you can see right here it says, oh, it's going to shift gears. Here's how to use this. All you have to do is ask the following question. What has price done in the previous 3 or 4 bars on the 1 minute chart? What's it done? And in this case, price started to come back. So in the previous 3 or 4 or 5 bars, price actually was pulling down. It was a pullback. So what that says is, I came out of the gate, price started to pull back. Oh, price is pulling back. The engine's shifting gears. So the probability is back to the upside. Let me say it one more time. When you see it come down and it says, oh, I'm crossing the blue line, then all you ask yourself is one question. What's the market done in the previous 3 or 4 bars? The answer is, oh, it's come down in the previous 3 or 4 bars. So the probability is high that it will continue to push back up. So what's it done in the previous 3 or 4 bars? If it goes down, then when it shifts gears, it's preparing to, in fact, go back up. All right, let's test this out. Does it happen again? All right, so the day continues on. Price continues to push upwards. Okay, we've got another shift in gears right here at, what is that, 10:50 a.m. Eastern today. All right, so it comes down, it's shifting gears. What's happened in the last 3 or 4, 5 bars? Let's see, on the 1 minute chart. Oh, okay. In the 1 minute chart, in the last 3 or 4 or 5 bars, it actually, price came up and went sideways, but it's mostly up. So guess what? I now prepare for a break back down on the bear side to go short. So what happens here? Again, it goes short in this case. All right. All right. So it predicts based on the disconnect between how effective the market is with the engine pushing price. When those two come apart, and you don't have to know all the math or the reasons why. What you do have to know is one thing, one simple thing. When it's shifting gears, when the market vehicle shifting gears, what was it doing just previously to that, and then prepare for a break in the other direction. Pretty simple, right? Pretty simple. You can do it all in 2 charts. I use a couple other charts as well for context, but you only have to trade off the 2 charts. Nothing magical about it being a 2 minute on one side and a 1 minute on the other. Certainly it can be other time frames as well. All right, let's excuse me. Let's test out a couple others while I've got you here. All right, let's take a look. Okay, so we come across here. Here the market's going to shift gears again. So it comes down, says I'm going to shift gears. What was it doing over here on the 1 minute chart, the previous 3 or 4 or 5 bars? Well, it was moving up. Well, okay, what's it going to do? I prepare for a break to the downside. In some cases, it's only a point or even a few ticks. In other cases, it's really long runs. Just depends. Let's try another one. Market comes down here again, gets real close to the line as well, to the blue line. What was it doing in the previous 3 or 4 or 5 bars? It came up. So I'm going to prepare for a break back down to the downside. And what does it do? It goes back down to the downside. Let's try it again, see what happens. We come across here, we ultimately reach, what is this, about 12:38 East Coast time, the trading day. Here we've got a shift, another potential shift. And what's happened in the previous bars? Well, the market's been pushing up. So what's the market going to prepare to do? It's going to prepare to come back down. In this case, I have to wait a little bit. I come across, it does a little pullback. All right, market tries again about, what is that, 15 minutes later. Gives another shift in the gears. The market engine and the speed in the vehicle come disconnected. It means, oh, it's preparing to make another shift. All right, no other indicators necessary. Going to make another shift here in the market. So here it comes. What's it been doing? Oh, it's been going up or trying to go up. Okay, what am I preparing for? Preparing for a break to the downside. And in this case, I get it. It finally starts to break. On the left-hand side, you can see the effectiveness chart. It continues to push down, building my confidence that the market is actually going to fall in price. And it does. So it takes two shifts for it to actually turn around, for the bears to take over, and here it pushes price down. Here comes another, and this will be the last one I go over in this quick video here today. All right, when you come across here it comes down, it hits, it's going to shift gears. So I wait for it to finish shifting gears. When it comes down and starts to push back up, I say, well, what was it just doing in the previous 3 or 4 bars? Well, it's coming down. So what am I preparing for it to do? We know the answer. We're going to prepare for a break to go back up. And what does it do? It, in fact, goes back up. Okay, here's the key point. All of the indicators that I've used over the years, all the training that I've taken, so many things based on lagging things, right? Stuff that's too late, right? The indicators are too far behind, or it's on one element of the overall market, but it doesn't give you the full picture. It doesn't tell you what the real move is. What the real move is the net effect of the entire engine, right? When you get in your car and you start driving it, you don't just drive with the pistons, or you don't just drive with the carburetor. You have the whole engine. And what you need is a view, a summation of the whole engine, and then how effective that engine is in moving the vehicle and the impact on the speed. So the speed is simply the change in price. We already know that, right? You've been trading. You know what that means, the change in price. So again, on the right-hand side, it's a chart, in this case a 1-minute chart, just showing price. On the left-hand side, though, is my trade secret, the market effectiveness chart. The combination of the market effectiveness chart, the ability to shift gears, and to know what the market engine is doing tells us the high probability moves and changes. So, really awesome. If you're interested, share this video with some of your friends. Pass it around to them. Have a chat about it. Reach out to me. I'd love to tell you more about it. This is pure straight data off of the market. No other manipulation other than some actually incredibly simple math. I think that's the beauty of it. And the way to use it is simple. You'll watch for it to shift gears, and then you prepare for a break in the other direction. Very high probabilities. Hey, my name's Grant. Thanks for joining, and I'll see you online. Trade safe.